Hello, I hope you're all well. And okay, so from where we were today, during the end of the first 3 hours of the London session, kuanzia saa 4 uh, from 10 p.m. to 10 a.m. to, yes, you see that, to noon. What we were seeing in the market, we saw the market uh, went ahead and started making this range here and started ranging in this market price here right at the Asian high. So the market is right at the Asian high, uh, trading from that swing to that swing there. Initially, before we were trading from, it made this swing high here. Then again, the market went ahead, uh, before the New York opened, the market went ahead and made this new high here. So right now we have a new swing high right there, but the swing low has been maintained. The swing low has not been broken. We have a new swing high. The swing low has not been broken, and the market is trading from that swing high going low. And as you can see, the market is reacting low. But what was our thesis though? Our thesis was that we saw that market from here, we expect the market to come back to this level here. That is what we expected. Why? Because if you look at the higher time frame of this market, you will see that currently, for example, let's go to the daily. Currently, in the daily, you can see that the market has formed this swing here. You can see one, two, three. It is a swing low right here. And this swing low was formed right at this EMA, which I told you before. It is an important EMA, the EMA 50 in daily time frame. It is an important EMA because it is a point where mostly mostly peak resets usually happen. So you can see the market came right here and made this swing. You can see this is a lower candle. This one broke higher. Then this one went lower. So this was a swing high right here. So the market usually trades from swing high to swing low, right? The market usually trades from swing high to swing low. Now, where was the market coming from? This is daily time frame. In the daily time frame, you can see we had this low here. This was the lowest point, the lowest swing right here. Then the market went ahead and made the highest swing right up here. Sorry, okay. Right up here, right? So the market was trading in this range. This is the daily range, right? Then what did the market do? It came back down here and formed a higher low, right? Right there. Failed to break this, respected the low, and it's heading upwards, right? It respected the low and it's heading upwards. And you can see it went the first day breakout, the second day breakout, where it reached here, pulled back. This day here, it closed inside. This was the inside day. So what do we expect today? We expect the third day breakout to this point. The only thing we need to know now, so we know that today probably this market might pull back high to this high here. Manake probably it will reach this high here, right? And you can see the green momentum has already begun. And if you go back down with that thesis, the only thing you need to know is from which point of liquidity will it start its movement, right? So we know the market wouldn't go upwards directly, it will make a pullback. So from where will it make a pullback? That's the question you need to ask yourself. Before it reaches this point, it might go low first. Now, if it decides to go low, where would be the end point? Where which oh, why is it doing this? Which liquidity do you think the market is coming to take? We had an order block here, right? This not even an order block. It's not even an order block. It doesn't even qualify to be an order block. Okay, so we have this red EMA right here. This red EMA is very dangerous because usually it is a point where market likes to reset, just like how it does here. So we will be careful to see what the market do. Remember, we are reacting, we are not predicting. So we have this yesterday's high, yesterday's low and yesterday's high. These are our closest point of liquidity to the current price right now. So we will focus with these liquidities, the nearest ones first. So if we go back to the 15 minutes time frame, let's go to the hour one and read closely, zoom in into the daily time frame thesis. So you can see we had the weekly range open. Don't forget, we are trading the weekly move because we want to close the week today. We know we're in the weekly close. So this was the Monday's high, and and at the lowest point there, that's the Monday's low. Then what do we do? Okay, so what has the market done? Market reset the initial high and initial low of the week. Then after that akatoka hapa chini, sawa, from this low here akaenda akavunja this high, sawa, and he broke this high, sawa. So baada ya kuvunja hii high akafanyaje? Akavunja, then akaja retested the high, then continued higher, then he went and made a swing right up there, and at this point akatengeneza the new high of the week. Baada ya kutengeneza the new high of the week hapa juu, what did he do? Right after making the high, the same day aka pull back, then after pulling back he gave us the first continuation structure right there, right? So remember we have the three market maker levels, right? Yes, tuna market maker levels tatu. So he gave us the first pullback right there, and that pullback ikaja in form of a rising wedge in a falling market, then akahit, then he went low. After going low, right here he gave us another pattern showing us that he's reversing at this point. Which pattern is this? This is the falling wedge in a falling market, which is a reversal pattern right there. Then akaraise, lakini alivyopanda up here we had this EMA, which is EMA 50. So it acted like a resistance point right here, pop. Then the market pulled back and tried to break the 50 again, couldn't do it. Pull back and tried to break the 50 again, couldn't do it yet. But right now it's where we are now in this third try on the break of the 50 EMA. Now look at what structure he has formed here. He formed the level, made the pullback, then right here, what is he forming? You might say a W, yes, but if you look at this closely, it is a shape that you can even draw a rectangle right there. So the first leg, second leg, right? But we still have this level here to respect. So we see a W, first leg W. Now what were we looking for here? We have two things we need to use to confirm this current range here. If this current range is broken and retested below, then we expect this to be a pullback low to the yesterday's high. But if this range here is respected and we form a swing here and we follow the upwards range and break it high, then that means this current range right here, that means it's a high. Now we had a template that we drew today in the 3 hours London while we were looking at this pattern here. So now let's look at what is happening right now. You can see the market is ranging sideways, and remember we have NFP just in a few, and the market seems to be ranging sideways, but it has already given us a signification. You see this pin? It has already taken liquidity on top, and I told you once the market ranges, it usually makes the first break in the direction which it is intending to go. You can see this is an uptrend, then we have a rectangle pattern, which is a continuation pattern. So for me, this market seems like it wants to go upwards, and I expected it to start a move down before going up. So that's why he made this pin here. He trapped people here. So currently what I'm expecting to see is this market pushing down for a few pips, which is what we call the stop hunt. So we wanted a stop hunt low, rise. So now if this market pushes down, I know the market will be making a stop hunt, right? So I will expect after it pushes down, it might move 25 to 50, 25 to 50 pips below this Asian range low. So from 25 pips Asian range low, so I expect from here this market might push down to this area here from 25 pips, which 25 pips is around here, to 50 pips, which 50 pips is around here. Now if I look at here down here, I see there is a level uh, 1.1500. These are quarters. We have not studied quarters yet, but they are also strong liquidity levels. So this is a good area to target, and if I do target this area from right below this range here, if I do target this area, I will have I will get for a good 40 pips. This is a very good 40 pips. Now that is if the market breaks low. Now what would confirm to me that the market has broken low? I would want this market to break out of range, then retest the range. Simply a break, a close out of range does not give me satisfaction. So I don't trade breakout, I trade confirmation. I have to wait for a confirmation. I have to see a pin right at that broken support for me to take a trade. So this right now happening right now, we are in the first hour of New York. This first hour we expect one move, second hour the second move, then the third hour would be the leg where we might leave. So we have these four first candles where the two candles have already formed. I mean this is the second candle, right? So you had this is the first 15 minutes candle. It has opened. It has traded inside this range. It is still inside this range. The range having this new high and has maintained the low, right? So we have this one opening here. Then we wait to see what will happen. The small blue box forming here is similar to this one here. Kwa maana gani? They are both session turnover gap times. Hizi ni gap times kwa maana right here there is a gap time where New York dealer is coming into the market now. So you might have one more push up from this structure, forming another pin perhaps right at this liquidity level here. Which liquidity level is this, by the way? Okay, we have this liquidity level here. Because this structure here seems to be a continuation structure. If you look at it properly, it is. If you look at this structure properly, you see we had an inverse head and shoulder right here. Then we took that this inverse head and shoulder. It formed this buy right here. Then the market pull back and look, it is forming like another inverse head and shoulder. We have this low, and then this lower low. Then we have this low here forming. So I expect a bump, the market to go higher. But before it goes high, it will make a stop and flow, then up. That's the thesis. And we can see we have this liquidity here, and we have this then the stop and box right there, and the yesterday's high right there, the ADR. So on top here there are a lot of liquidities, a lot of reasons for the market to go up. But before it does go up, I expect it to come down and at least take out this range and maybe make a fake breakout. So maybe he might make a fake breakout and pull back in. However, but I expect kwamba he might come back and take this liquidity down here before he does any movement going upwards. So he has made that one already. I expect him to make this one. Then that's when he goes to go ahead to make his continuation. Now, the thing about today is the thing that I need you to consider about today is today we have the NFP news. And the NFP, we usually say these templates that we are showing you, these are the templates that usually happens most of the times. They usually happens, they are mostly respected in this market. So why are they respected? Because they make money for the dealer. The dealer makes money off these templates. So most of the times it is usually respected as it happens. So all you need to do is to be able to look at the market logically, thinking of you and thinking of the other person in the market who is taking the other side of your trades. So let's see what will happen. The NFP may also be used to complete this structure here. Remember, we have this pullback. We came back to this. So this movement upwards that we are expecting, yeah, it is a temporary move because of the down movement that we have been in. See that down movement we have been in? Yeah. So we have a weekly low which hasn't been taken. We have a weekly high that has been taken. So if this pullback does come back in, then it will come back to take out the liquidity low. So basically we're in the first hour. Let's see what the dealer does with this range. We don't take trades in the first hour. We wait for the second hour and the third hour. Perhaps the second hour going to the third hour, that's when we might get a confirmation. So here we want to see a pattern forming which has at least 7 candles. That is a pattern that forms for at least 1 hour and a half. Kutoka kwenye lisala saa tisa hili, we need to wait. For example, after this candle closes, we need to wait for at least 4 more candles before we can start saying that this structure perhaps intends to do this or that. So right now we just have to simply observe and see what it does in this range. Remember, the market does one of three things when it reaches to the important areas. When the market reaches in an important area, it can do one of three things. It can either break the important area up, then retest and continue up, or break it low, then retest and continue low, or it might reverse in the resistance and start selling, or reverse in the support and start buying, or it might make a fake breakout. It might pretend as if it is breaking out, then comes back in immediately. So it breaks out, then pulls back in immediately, and there it it is said to have made what? A fake breakout, and it will reverse. It breaks out, then comes back immediately and reverse. As you can see here, it broke out, came back immediately and reverse. And if you want to see this breakout clearly, you can see it in a five in the 5 minutes time frame. You can see we had the double top here. A lot of liquidity came, grabbed that liquidity, went ahead, failed to break though. So he didn't make enough money. So that means he's looking for more. He has failed to break, he's looking for more. So he's working the low. Working the low means looking to do something in the upside. He has opened a new high but still maintained the low. Yes, 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 yes. There is that dump. You can see the liquidity low now is being grabbed here. See, he is grabbing the liquidity low. As we had said, he must grab the liquidity low before he came back up. So we see now there he's pulling back. Now that's when That's when we wait for a pattern to form. What pattern has formed? Not yet. We see has grabbed liquidity low. Let's wait and see. He just pinned the M2, opened that uh, range there. That's the first hour's range. The first hour's range has been opened. In the second hour, we might see an extension of the range. If he broke out low, we might see an extension of the low. Then on the third hour is when we see the in the second half hour of the. So here we had a good 50 pips. This was this not 50 pips. I mean, you see the first break, the first candle down, second candle down, third candle down. Now let's see how this candle that has just opened right now is gonna close, and we see the next candle. Of course, if you want to look this closely, you can move to the 5 minutes time frame, which is also our entry time frame. We have a stop hunt box, which is what we think is going for, and he has waited for the New York session to do this because of the NFP news. And we have the NFP news happening right after how many hours? I mean, let me see. Is it the one happening right now? Yes, that's the NFP. That's the NFP. He has used the NFP news to take the liquidity low. That's the NFP. So if you traded this was a good one. We saw this. He has taken out. We expected this. So if you entered this, that was a good trade here. And it might still go down to this level, but that's not a here. This is not a good place to enter. You should wait for the pullback a little bit, because if you enter here, okay, it's also a good place to you can take a trade, but uh, that's your choice. But you can see that we have to grab liquidity low to at least this quarter here. So you look for a place where you can enter, like that pullback there. Maybe let's try and sell this five. Let's see. Let's just see. We want to target where? We'll target that's 30 pips maybe. Although this I expect only a small movement down to the stop. So this wasn't such a yeah. So about maybe 20 pips. Then it will come back aggressively. Maybe 25 pips at a target. Maybe you can target this floor. Yeah. Mm. All right. So money with that. Let's see. That's in there. Always I stay away from the swing. That. Okay, not such a good trade, but anyway. It's NFP, so I expect something to happen. It made almost everything we needed. So reverse liquidity is right there at the quarter, and we target the quarter and see that we expect him to pull back. There is a pullback I'm expecting, so that's why I'm not trusting this sell. Otherwise, let's keep on observing. For now, I would stop this. I'll stop this stream, and let's keep observing.